This is the Daily Market Comment by Rafi Boyadjian. I'm Maria Pachordes. Thanks for joining us at xm.com. U.S. stocks continue to defy gravity, shrugging off concerns about more Fed rate increases and an uncertain economic outlook to notch up solid gains for the first half of 2023. The S&P 500 just had its best start to the year since 2019, while the Nasdaq Composite had its strongest first half rally in 4 decades. Even more astonishing in the current economic backdrop is how the tech mega-cap Nasdaq 100 managed to post a record first half, growing almost $5 trillion in value. The latest wave of euphoria got a boost last Thursday from data showing that the U.S. economy grew more than expected in the first quarter of the year, despite rising borrowing costs and sticky inflation. There was more good news on Friday when the Fed's favorite inflation metric, the core PCE price index, moderated slightly to 4.6% in May, and consumption slowed too, raising hopes that a soft landing is still achievable. Even Asian equities were able to join in the fun today, with a Nikkei 225 index in Tokyo closing at its highest since March 1990. U.S. futures appear to have lost some steam today, however, in what is expected to be a quieter session ahead of tomorrow's Independence Day holiday. But the downtime shouldn't last long, as the June payrolls report is due on Friday. Powell couldn't have made it clearer last week that more rate hikes are in the pipeline, even with inflation steadily moving lower amid a still very tight labor market, which Friday's numbers are once again expected to highlight. It seems that for tech stocks, as long as recession risks remain contained, higher yields are no longer such a deterrent. In foreign exchange markets, the U.S. dollar was back on the front foot on Monday after a short-lived sell-off on Friday following the soft data. The focus later on will be on the ISM manufacturing PMI before attention turns back to the Fed on Wednesday when the minutes of the June meeting are published. The yen was also down against the dollar, but was steadier against other majors. If this week's data out of the U.S. surprised to the upside, there's a risk that the yen could come under renewed selling pressure, prompting Japan's finance ministry to intervene. This is today's Daily Market Comment. Thanks for joining us at xm.com.